All right, so stocks finished a couple day rally here with a third day of this kind of some very small flat trading range, and not really quite reaching the last near term peak. So I'm gonna break down this kind of short term trend that's developing of lower lows and now potentially a lower high, and what that means for the where the end of this current intermediate run might be. We're also going to take a look at some other indicators in terms of what's driving this move, this risk appetite type move, and just how much risk appetite there is from some of these other asset classes, and some divergence patterns that are forming that could also be very telling. So we're going to break all that down. We're going to take a look at a stock it's kind of got a good little bullish pattern developing on it, but it's about as sideways as it can be over the last so many expiration cycles. We're going to talk about how to trade a stock that is just stuck in a range around, with a big volume center of gravity kind of keeping it in that range. We'll talk about how to trade that. So let's go ahead and get started. Today is Wednesday, February the 3rd, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we continued the little two-day bounce with much smaller range today. And you can see we really slowed down. The near-term line did get in the reversal zone. It's a pretty good, strong, bullish move, though it is still lower than the last near-term high. So remember, we went to a lower near-term low point with this drop. So when you correspond the lows down here to each successive low, when the near-term line gets below 50, so you can kind of see, like, since this intermediate run started, we've had 1, 2, 3, 4, 5, 6 intermediate lows. So they are up here: 1, 2, 3, 4, 5, and then 6. So number 6 has been the first one that's been a lower near-term low. And then all the highs in between have all been higher, except so far as of right now, this one. So, are we starting the process of lower near-term lows and lower near-term highs? Now, the benefit, the nice thing is that this wasn't a bearish, it was a lower low, but it wasn't a low below 20. And the good thing about this high is it is a lower high, but it's not a high below 80. So we're not getting bearish peaks in the near-term line down here or lows down here yet. But you are starting to see them up here. So we'll see how that translates, if it does, down here. The intermediate line has turned back up, so we got back to dark green shading. We obviously got back to a green line because we're above a rising moving average again. So things are moving still to the upside. You take a look at the NASDAQ, which was a little bit more bearish today, kind of a, what are those called? Dark cloud cover. We didn't get very big of a candle here. It's ideally you want a bigger candle, but we gapped up and then closed down to the midpoint of the body or lower of the prior candle. So not a textbook, example, but the concept is there. It's a pretty bearish candle. The momentum line dropped. The near-term line got above 80, but not to a strong level. That we got back to dark green shading there, and then you can see the Russell's really slowing down. So it's still definitely getting a lower high point, but its near-term line is pretty strong. In fact, you did have a cluster. You had 3 lines for a cluster yesterday. It just wasn't the intermediate line. It was the market sentiment line with the momentum and the near-term line. So the question now is, like, are we going to be able to kind of get going? Are we getting like a shoulder, head, shoulder pattern here, kind of a head and shoulders on the tilt on the Russell 2000? You don't quite see it as much here, though you do get a little bit of a rally up going here on the kind of a good strong push higher, and then now potentially a right shoulder over here on the for the S&P 500. So the idea is that we're starting to, again, like lower highs, lower lows, we're starting to show just some cracks in the sidewalk, so to speak. Not full on like breaking things up. We're not breaking the band up here, but there is some cracks that are showing, and those are two notable ones, and what we see on the Nasdaq too, and then like I said, the Russell as well. So we do have dark green shading and a green line, but this is not a new intermediate run because we haven't finished this one. So we're still on a really good strong move. Like, we're 3 months into this intermediate rally. That's a good mature run already. Once you get past 3 months, you get into 4 and maybe 5 by the time we get to March expiration, or 4.5 by the time we get to March expiration. We would be in a very mature, considering that we didn't have very much of an exhale here. To have a good strong run that lasts long, a couple of months longer than normal, to follow that up with another strong run that lasts a couple of months longer than normal, with a shallow exhale in between, would suggest the possibility of an even deeper exhale coming after. So I think ideally we would like to go ahead and start this little exhale now, so that we don't have a deeper, more painful one later. And when I say more painful, I'm talking about more painful for people that get in really, really late, right? It wouldn't be painful for most, especially market scholars, and again, it would just be the percentage decline would be greater, because the more I move the zero line up, the bigger the gaps get. The bigger the gap between 0 and 23 gets, the bigger the gap between 23 and between the 38 and 62 gets. So the gap gets bigger and bigger as I move the 0% line up higher and higher, and we continue to stay, or get more and more bullish. Before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That lets us know that you liked our video today and you want us to do another video again tomorrow. It's a quick way to give us feedback. If you don't like our videos, you don't have to click on anything. You don't even have to watch. But if you do like our videos, let us know with one click. You can do right now while you're watching. Also, comment down there. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access to our Market Outlook forum with your free subscription on our website. Also, follow me on Twitter for more content in between the videos from day to day. There's my handle there, at DavidSettle42. And then join our Market Outlook Facebook group that we've created. All right, if you're watching here on our blog, click over here and for the live trade review. This is where I review all the old trade ideas. We closed out a couple trades from previous Market Outlook videos today, and we also put on today's trade idea before the market closed. You can see those here with this live. You can also see all the old archives of Market Outlook lives when you get to that page as well. And then down here's our trading rooms. Our trading rooms and our Market Outlook Live are available for all of our monthly subscribers and our premium subscribers. So you can get access to our monthly subscription plan here for those that are new to us. The Q&A sessions here, like Brandon's tomorrow, is available for our premium subscribers, as well as our access to our class forums, community, as well as the premium resources are available for our premium subscribers. Come down here, click on this heart. It opens up this new tab. Hit this like button right there. Also click on the thumbs up. Also, again, opens up a new tab. Come down here and click on that like button. Again, the more you do that, the more our content will be reached by more of our followers. You can see there's a small percentage of our followers actually saw this post. Again, the more likes and engagements these have, the more people will, this will get pushed out to more of our followers. It also benefits you because the more you, Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. All right, let's get back to the other charts here and take a look at the long-term chart. You can again see that kind of double transition candle forming. That's why I think, by the end of this week and into next week, we might be flirting with that 50-day moving average sooner or rather than later. You can also see too the high PPO, but if you look at like the RSI, and you can see how we're forming lower highs, so no divergence, but you notice we're not getting back above 100 on this peak. We're above 50. We're kind of in the sucker zone on the upside now, where we're not getting above 50, but we're not above 60 either. And we look at that directional movement index, which has been getting progressively, you can see the positive peaks have been progressively smaller. The last one got above 30 barely, This one is barely getting above 25. And then you can see what happened with the negative peak, just really breaking out above 30 and barely is pulling back below 30. So according to the directional movement index, this is a pause in the bearish move, but it's still leaning on the bearish side of things more than it is on the bullish. You can see we came down to this volume node, 23% retracement. We're bouncing back up. We're back to the upper quartile even of the Bollinger Bandwidth, getting up in that 76% for the last couple of days. You notice not really getting significantly above it either. So we may be flirting with the end of this intermediate run very, very quickly here, as like I said, as we head into the end of this week and into next week. If you look at the Ichimoku cloud again, no bullish move. Like we got the end of the bullish run. We're not starting a new one yet according to this. We're above the cloud, but just flirting with above it. So we'll see. And you can see the clouds, it's getting bigger and it's moving up higher. And we're not really pulling back away from it anymore. Like we had a really good space there. We don't have the same space anymore. It's going to make it very easy. And the red line's not very much. It's not very high above the price either. So it's again setting up for kind of some slowdowns, some things that are slowing down here. Let's take a look at the intraday chart today. Here we go. Here's the intraday here. And you can see the move again, this gap from yesterday that didn't fill in yet, and it's not a breakaway, it's not a runaway gap. So there's a good chance that we can fill that in relatively quickly again, because that's what tends to happen. We filled in every other gap since in the last few weeks. That's the only one left in the last couple of days, at least, that we haven't filled in yet. Let's see here. Get that chart back up. Let's take a look at today's volume and trading range. You can see the volume diving like a rock down to 52 million. The trading range got really small too. We went all the way down to 3 points. I mean, we've had some ranges here lately that are much, much higher, but to get down that fast down to 3 points, which is well below the average. It's like 3.22 is way down here. And the volume at 52 million is also way down below the average. So again, you can kind of see just like that, after being relatively bearish, some pretty big ranges last few days, last week or so, today, just like that, not getting much of anything. And then finally look at the volatility index. And you can see how fast the volatility has dropped like a rock, already down to kind of some strongly bullish, like the 85% marks kind of in the middle of this bullish territory for risk appetite. And we were in the lower half of that bullish territory. So kind of more an oversold volatility index. Last time we were this oversold was back over here when we were just barely above, when we were hitting 21. And now you can see we dropped all the way down to 23 from these 34 levels. But again, we haven't seen the intermediate pop yet that would signal the typical signal for a new intermediate run. As close as we got there, we didn't finish at that 105% mark or higher. So on Friday, we talked about this idea that we were like as close as you could be to the beginning of an intermediate or pullback without actually having one. And we thought, okay, what that typically means is we'll probably bounce up off of really short-term oversold conditions early this week, and then peak, and then start to roll over towards the end of this week. And that's been kind of playing out. Probably a little bit higher move than expected early this week, but we already see it petering out today. And we'll see if that turns into something more from a weakness standpoint tomorrow and or Friday. So what do you think? Do you agree with that technical assessment? Do you disagree? Comment down below as whether you agree or disagree. Especially if you disagree, comment down below with what charts or indicators that you're seeing that suggest why you're either a lot more bullish than I am or a lot more bearish than I am. All right, now let's take a look at what's driving the price action. Interestingly enough, bonds have really kind of hit hard today. You'll see that here in a second when we talk about bond yields. The dollar has been really positive, interestingly enough too. So with that dollar being positive, look at what the best performers have been. Emerging markets, QQQ has been up big, 4% this week. Small cap stocks have been up big, so they both have been rallying instead of one or the other. They both have. Developed markets lagging behind. Commodity prices have stayed strong despite the weakness in the dollar. And if you take a look at the dollar index, and I tweeted this out for those who follow me here on Twitter. There we go. I tweeted this out earlier today. This commodity prices are setting up for a divergence. You can see how we are getting really strong momentum, eventually to where we peaked on the MACD here late in the cycle, right before the January expiration, and then then we had a little bit of a pullback to the 17-day moving average and bounced back above the 8, back up to new highs. But the MACD and the stochastics are not getting up to new highs yet, and most likely won't, because that's a pretty significant high in the MACD. And you also see too the RSI and the CCI are forming divergences as well. So with those divergences in mind, what's going to cause that, and that's this dollar. Look at the dollar move, breaking down below the 38% retracement level, breaking below multiple weeks of lows here, breaking below that, and you can see coming down to the 38% of this longer term run, lining up with the 78% move of this run. Looks to be about where it could head down to, and a move down on the dollar that way would start to put some pressure on these, because at that point, remember the dollar is more of a safe haven asset. It gains, it gets really bullish when there's more demand for safety. So if you take it, especially when we're in this kind of bullish risk appetite environment right now, look at long-term bonds pulling back down to the 38% retracement level. Here, let me show you where this line comes from. Let's see a little bit of perspective here. So this is a kind of a big long-term move that bonds have had since the fall of 2018. So when this kind of bear market started, right? This fake bear market started in the U.S. It really started over here in early 2018, but in the U.S. it really kicked off in the fall of 2018. A really good bullish move. I've got the peak, not with this really kind of significant COVID high, but the peak is kind of over here. You can see we kind of double topped there with the low point in between with the cluster. And now we've come down, we're hitting some significant support here at the 38% Fibonacci retracement level. This is what it looks like from a yield standpoint. The yield's kind of forming a little head and shoulders again with this idea that we peaked here, and now we're in the process of forming a lower high on yields, not able to really follow through on that high up to a new higher high. This RSI barely getting above 60, the CCI barely getting above 100. So it makes you wonder how much is left in TNX to be able to continue to go with the divergences that are showing up already on TLT as we do head into some support levels. Here's the Ichimoku cloud for TLT, very strong trend, bearish trend, and again, you wonder how much room does this have left to go into this area now that you're below this point of control. But if I were to go out to a 5-year chart, so you can see what the volume profile looks like there, you can kind of see, down through the retracement, you got one little volume node in the retracement zone, and that's it on a 5-year basis. We moved up so fast earlier during that bear market. We moved up so fast that this hasn't built up a lot of volume kind of below where we're at here. There we go. On a weekly chart, you can kind of see again where that volume starts to kick in inside the retracement zone there. You can also see the 38% retracement. In fact, if you look at it from this perspective, you can see we've got a death cross environment now on long-term bonds as we're heading down, like I said, towards that support. The question is going to be whether or not that we are, if we break that support level at the 38%, kind of at this 150 level, if we break below that 150 area and into this zone, then yeah, it's going to be really easy to fall down into this kind of 140, 138, where that retracement, where that node is right there. Otherwise, I don't expect this to go all the way back up to 170, But I wouldn't be surprised if we made our way back up to 158, maybe a smidgen up above it. And again, on any kind of weakness, right? Intermediate decline type weakness. That would also coincide, as I mentioned to you before on the chart, an increase in the dollar as the dollar breaks through here. Let me show you the regular candles. Breaks through this week, the 50-day moving average, as well as the lows of these past few weeks, as well as the 38% retracement level. So that's a pretty significant drop into the retracement zone, and of course getting us through the retracement zone down to that 78% mark seems to be a likely target to the downside if we continue this. And again, if we continue that kind of move to the downside, it won't be because of risk appetites increasing. If we're pushing into the dollar, right? We look for some weakness to occur there. Here's gold breaking below that 23% retracement, getting down to relatively low PPO with both the 50 and the 200 day in between the 23 and 38% retracement. So it seems like it's kind of slowing down its descent. In fact, if you look at its Ichimoku cloud here, for the ETF, you can see very flat and a lot of noise, right? We haven't really gotten a significant trend, really one direction or the other, since we've had these kind of back-to-back really strong bullish runs that went parabolic there at the beginning of August. It's been very sideways since, and looking at the Bollinger Bands for it, you can see how low the bandwidth has been, and just again how very sideways we have been, with a lot of resistance up above and some pressure at least down towards 161 to the downside. And we can towards that 38%. We can realize that if there continues to be some strength in the greenback there. All right, let's take a look at the sectors and how they're performing here. And you can see energy really had a big bounce today. So look at that. I mean, it had a big bounce yesterday, but wasn't able to really hold it. It fell down by the end of the day. And you had your three cyclical sectors doing well with financials. Financials had a big pop, and it did hold. Well, today, energy had a big pop and then finished at its highs. It had a very, very strong move. And you can see technology, discretionary, communication services all still holding up too, but coming down into the end of the day today. Financials kind of holding its ground. Industrials kind of holding some market matching returns there. Your safe havens really lagging behind outside of real estate, all really lagging behind. So big strong move here. And again, if the dollar strengthens, expect more weakness in these areas. You can see so far the dollar has made this move since, let's see, from a daily chart, let's go on a daily chart. It started this bullish move, that's the Euro's bullish move. So the dollar started this bullish move on the 7th, right? That's when this started its decline, and then it's been going downhill ever since. So the 7th, that's at night, so it's really the 8th. That it has started its bullish run. So we'll go January the 8th all the way up until now. The dollar's been on this bullish run. Well, look at what's been. Oops, excuse me. Let's get to the sectors. There we go. Let's get to the sectors. January the 8th. So that's when the dollar started its run to the downside. Since then, you can see communication services up 4%. The market's flat. Communication services, technology, discretionary, all up. Real estate and utilities doing well too during the dollar run. And you can see on the downside, and at least up until Friday and Monday's low, materials down, financials down, energy down, industrials down. They've rallied since, but you can see they're still pressured relative to the market. They're still pressured against, because of that strength in the dollar, really putting pressure more so on those sectors than these other cyclical sectors that do well in a bullish dollar environment. Those kind of large cap FANG names. And of course, real estate and utilities also do well in a rising US dollar environment too, especially if yields are rising, yields are falling, and that helps put some, get some lift to those two interest rate sensitive sectors. Let's take a look at this chart, the comparison, the 12 grid for the U.S. sectors. And again, we're back to some dark green shading and green line in these cyclical areas. Financials also getting back up there too, but we're still, I mean, red lines in some of these areas, light green shading. So we're not really, some really good bounces, especially in energy. Some really good bounces there. Utilities and real estate still looking strong along with those cyclicals. But you still see some weakness in materials. You still see some weakness in industrials. You still see some weakness in financials as it's lagging behind, not anywhere near its highs from a couple of weeks ago, like all these other ones are all. We had overbought clusters just a week or so ago, and we're right near those highs already. Financials not even close. Industrials not even close. Materials not even close. Energy, even with the bounce today, still not even close to those highs. And healthcare, giving us the light, even though we're still dark green shading, we're a yellow line now. And of course, your cyclical, your safe haven areas all still really struggling down there. All right, so for our trade idea of the day, I want to take a look at Home Depot. Home Depot has had an interesting looking chart here because it's been kind of flirting with getting bullish again after having kind of an extended bearish decline, but not really going anywhere. About as sideways as you can be through multiple expiration cycles here. When you look at it like its two-line version, you can also see the little bit of a bounce it had yesterday, getting back from below its moving average. Histogram rolling up. Looks like the stochastics is also stopping its decline. We almost, for a while, we were back above the 8 and the 17-day moving averages there. When you look at some of these other oscillators down here, we're kind of in between the 60 and 40 range as we've kind of been, like I said, trading in a range here. Also between negative 100 and 100 quite a bit. Little brief periods above 100, a little brief periods below negative 100, but for the most part in between. And then you look at the directional movement index to see, do we have a directional move going on? And we really don't. The ADX has been down below 25 with only a couple brief negative pops up above 20. Otherwise, it's been below 20 this entire time too. So, and then again, from a trend strength standpoint here, lots of noise, big chunk of period of noise you can see between the 0 and 23% retracement levels of this rally that we had off the COVID low point. Finally, look at the Bollinger Bands. You can see a big point of control sitting right in the middle of that 0 to 23% level. So that point of control like that, outsized level that's kind of on its own inside the value area, kind of acts as like a big center of gravity for a stock like this. So what we decided to do was to do a bull put spread, selling the 255, 250, and then also selling a bear call spread, selling the 295, 300. That gives me an iron condor here with the break even sitting right outside of that range. So below the 23% and above the 0% retracement level. So if we go through the February expiration cycle into March, centered around this point of control, we might go up or down. As you can see, that's what we've been doing. But if we kind of finish March expiration around there, then you can see we get about a little bit more actually than a 50% return on the risk that we're taking, and knowing that the most that we'd want to lose out of the 966 is $534. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Remember, all of our subscribers, even our free subscribers, have access to that forum. Open up any new threads with any questions or comments you have. Reply to anybody else's threads. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video as well as on Twitter and Facebook. Remember to like the Twitter and Facebook posts. Comment on the video down below. Have a great rest of your Wednesday night, everybody. And we'll see you all next time.